Hi, I'm Stephanie Wood. I'm an associate at Eversheds Sutherland.
And I'm Daniel Nicholas. I'm a partner at Eversheds Sutherland.
Proposed Section 965 regulations were recently released regarding the application of the transition tax.
The proposed regulations provide for several elections that need to be made by taxpayers, generally with their 2017 return for calendar year taxpayers. One particularly important election that taxpayers need to consider carefully is whether to elect to shift basis to reflect deficit sharing under Section 965B.
The proposed regulations contain two examples that illustrate this election with respect to a distribution in an inclusion year. In the first example, USP wholly owns two tiered CFCs. USP is a calendar year taxpayer, while CFC 1 and CFC 2 have year ends of November 30th. CFC 1 has a deficit of 100, while CFC 2 has E&P of 100. The stock basis in both CFC 1 and CFC 2 is 0. On January 1st, 2018, CFC 2 makes a distribution of 100 up the chain to USP.
In this example, USP makes the election to shift basis to reflect a deficit reduction. For purposes of calculating the 965A inclusion amount, CFC 1's deficit is shared with CFC 2, and thus there's no Section 965A inclusion. As a corollary, CFC 1's untaxed E&P is increased to reflect the shared deficit.
Because of this election, the gain reduction rule applies, and the distribution up the chain is reduced by CFC 2's PTI to 0.
Right. The rules require three different basis adjustments for CFC 1. First, an increase to reflect the Section 965 PTI of CFC 2. Second, a reduction to reflect CFC 1's specified deficit that was taken into account under the rules. And third, another reduction to reflect the gain that otherwise would have been recognized under Section 961B2 with respect to the stock of CFC 1. The net $100 reduction in the basis of CFC 1 is treated by USP as gain recognized from the sale or exchange of property on November 30th, 2018.
The second example is similar to the prior example, except USP wholly owns two brother-sister CFCs.
Like in the prior example, the rules result in a $100 reduction in the basis of CFC 1 that's treated as gain from the sale or exchange of property on 11/30/2018. However, the rules also illustrate how in the brother-sister context, you need to reduce the basis in a deficit corporation.
Taxpayers should carefully evaluate these rules, as a change in facts may impact the application of Section 965. For more information about this topic and similar topics, please visit our website at eversheds-sutherland.com.